What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well. And yeah, let's get straight into things. So as you can see, we're having a pretty reckless start to the week. If you watch yesterday's video, you'll see that price pretty much opened as I was filming it, and it's probably going to do the same thing again. Anyway, we opened, price ran straight to the liquidity targets that I drew our attention to. So this high got taken as we expected, and this high got taken as we expected. Now, although it was as we expected, quote unquote, it wasn't expected to happen so fast. So the fact that that's happened has left me in an awkward position whereby where I was expecting us to trade to later in the week, the fact that it's already done it now means that we need to start thinking about, okay, if it's gone and done that now, and it's gone and ran very quickly, very aggressively quickly to the premium side of the market, took out buy stops. If they're taking out buy side liquidity, it means that its price is probably going to want to continue to trade lower because they want to stop anyone that's short right now. Now, it doesn't really change my bias completely. I am still paying close attention to this daily breaker, and I am still paying attention to this 4-hour bullish order block. But generally speaking, yeah, it's been absolutely disgusting. So let's go to the 4-hour, and you can see how price opened, rallied very aggressively, took out our buy side liquidity targets as I was talking about, traded nicely into this breaker, which is quite interesting. And when I say breaker, I mean it's the last down close candle before that up move, which is right here. If we drag that right through, you can see how price respected that and then turned around at it and is now heading down. So now it's just a matter of seeing how price treats any kind of PD array. If price starts respecting bearish PD arrays, so anything above the market, if price starts respecting that and respecting those evidently, then we should definitely start thinking about sell side liquidity as targets. So just to clear up the charts a little bit, let's remove everything except for that breaker, just to note that we traded up into this. And then what I do have my eyes set on is this gap right here, this volume imbalance. So you can see there's been no trading here. Yes, we wicked down into it, but as far as I'm concerned, price will likely want to try and fill this gap in. So I'm going to draw this out. I'm going to make this blue, and this is what we call a volume imbalance, a 4-hour volume imbalance, like so. And then now we're just going to be looking for any kind of premium PD array, so anything above market price that price may be able to key off to help send price down towards this level. Because after seeing that and the way how quick they took out anyone that was going short here or going short here would have got absolutely destroyed, right? So they're obviously taking them out for a reason, and that may be because price wants to attempt to trade on lower. Let me quickly check something actually. Did we take out any lows on the pairs? I didn't check. No, okay. Cool. So let's now head down to the 1 hour, take a close look at price. And you can see how we gapped higher. Oops. We gapped higher. We filled that gap in now, and we're now below that gap. So this gap should now act as a inversion fair value gap, a bearish inversion fair value gap, as in we shouldn't see price trade back into this range. Although, no, it's not that it can't trade into it. It's that if price does trade into it, it should use it as resistance. So the points of this range that I'm going to mark out is going to be the midpoint, which is right here. We'll make that dashed, make it a bit thinner. Let's make it orange. And then we'll do the same with the 25% level as well, which is right here. We'll make that dotted. So I don't expect us to return to that 50% level. These colors are confused me. Let's keep them all red. I don't expect price to return right up to the 50% level, but that 25% level is a very high likelihood, as in if we see any rallying, that's where we want to see price trade, and that is a stretch for me, seeing how bearish price is. So how we can mitigate that, or how we can be more specific with this, is what we'll do is we'll look at the 25% level of the 25% level, which is right here, and as we keep dropping down time frames, we should be able to identify potential PD arrays within these ranges that price may want to use to key off. But it just gives us an idea as to where we are. And this doesn't need to be that thick, even though we like it thick, don't we, lads? So let's go to the 15-minute. And you can see how we have a fair value gap. But like I said, price is looking extremely bearish anyway. This is that volume imbalance that I want to see price continue to draw to. But moving into the new day, my expectation is that if we're going to have a down close day, then we need to see some kind of rallying above that midnight opening candle. So let's get a few things marked out. Sunday opening was obviously, Monday opening was up here, and then our Sunday opening was very obviously right here. And you can see we're at, this is that Sunday opening price right here. So with that taken into account, look, we've dropped now below that Sunday opening price. And what, if you've been watching me for a while, you know that this is important because we expect it to act as like a barometer for price. So price should be able to use it as resistance or support. And once we're below it, we want to see it act as resistance. So like I said, as we march into the new day, if we start rallying and we get into this range, I'll be looking for shorts above with the expectation that price is going to try and fill this volume imbalance. So this is generally specifically where I want to see price trade down into. And if we don't reach this volume imbalance by this high impact news event, which is the job openings at 10 a.m., if we don't reach that by then, so say 8:30, we're still above it, then I'll be looking for a setup to try and trade down into it. If we've already traded into it and it's 10 a.m., I'll just stay out, to be honest, because there's only so much that can happen on a Monday and a Tuesday, especially on non-farm payroll weeks. But this is just something to take into consideration. So let's just clean up our charts a little bit. We don't need, wow, we don't need all of this, do we? Excuse me. But the places I'm really paying attention to is definitely this level right here. And then the reason for that as well is because it's the midpoint of this 15-minute fair value gap. Very typical if prices take out that. And then we also have a beautiful swing low, relative equal low. So this low and this low makes relative equal lows. So what's that for us? South side liquidity, very juicy. Because we like it juicy, don't we, lads? Move that to the middle, drop that to the bottom. Oh, what am I thinking? There we go. This is where I want to see price take, as in this is the reason why I want to see price go there, because there's south side liquidity and price is looking extremely bearish. Let's go to the 5 minute. Again, this massive drop in price here, there's nothing there. So although we've marked out these levels, there's nothing directly there except for this breaker. Where's the breaker? High, low, higher, high. And I know it's a bit awkward, but then we drop. So this last down close candle, you see how that lines up nicely with that range. So I'm not saying that price has to go up there, because we saw what happened yesterday. It doesn't need to rally before it expands, but well, it does technically. But my point is, I want to see some kind of manipulation. So I'd ideally want to see price rally. I want to see us march higher, maybe during the Asian session, maybe during London. I want to see us trade maybe into this fair value gap, which lines up with this level, and then I want to see us continue lower with the expectations to trade into our south side liquidity target and try and fill that 4-hour volume imbalance I was speaking about. So that's pretty much everything on dollar. Nothing too complicated. Let's draw this out because this level is looking a little bit more like a possibility now. And this will be the highest I want to see price trade. So if price trades above this tomorrow, oh gosh, I'll just be like, bro, I'll be tapping out. But generally speaking, that's the highest I want to see price rally tomorrow for me to be happy to remain with my short bias. So let's head on to GBP USD as per usual, and you can see GBP started violating some of the PD arrays I spoke about. So you can see again, when GBP opened, we pretty much instantly took out our south side liquidity target, and then we had a reversal, and now we're trading through the daily inversion fair value gap, which I wanted to see act as resistance. So the fact that price is now trading through these kind of PD arrays is saying to us what? I was wrong. Simple. And what I was wrong in that this isn't well, you could argue it did because of how we moved away from it, but the fact that we're running through it now suggests that this should now act as an inversion fair value gap. What does that mean? As in, the fact that we traded through it and it was originally supposed to act bearishly, now it should act bullishly, in that we should still be able to use this exact same level, but then reverse its there's a word for this, reverse its behavior, reverse its mechanism. I'm trying to sound fancy here, but we can reverse its mechanism in that now that we're above that 50% level of it, when price drops down into it, I want to see it provide support. So again, the same way I want to see dollar do some rallying before it drops, if it's going to keep dropping, I want to see pound drop down into this daily inversion fair value gap to trade on higher. But we're on the 1 minute here, let's not confuse ourselves too much. Let's go to the daily, and you can see how we came down, accumulated south side liquidity. I doubt price is going to make it down here now by the looks of things. Maybe another time, or maybe at the end of the week with non-farm payroll. So I'm not going to completely take our eyes off that. And then we have a daily bearish order block, but again, if we're bullish, this should get absolutely violated. So I'm going to keep that there just to see, because if we find ourselves rallying through it, so if we start trading to it and we start trading through it, it's getting absolutely wrecked. It's getting its back blown out. If this bearish order block gets its back blown out, then we know we're clearly bullish, and we can start looking at this high, these highs as targets, and we can start looking at a more longer term thing, and I can be a little bit more happy about the condition of the pound. And then this green line, what was this green level? You guys probably remember from yesterday's video, but I'm gonna get rid of it. And let's go to the 1 hour and take a closer look. And this is what I mean. So we came down, accumulated sell stops, beautiful reversal here, by the way. When did this happen? The reversal happened at 3 a.m. There's a nice setup, of course. Let's go to 3 a.m. Where's the setup? Price drops down, fair value gap. Where's the fair value gap? You can't see it on this time frame. This is what you call an implied fair value gap. This is why ICT concepts are so confusing, because you don't understand. It's literally code. I can see there's a fair value gap there. You guys might not be able to see it because of this wick, but there's one there. And if we drop to the lower time frames, we're gonna find it. Voila, there's a gap. We didn't trade down into that one though, but there's one here and there's one here. So you can see the gaps forming, as in you can see them on the higher time frames. Bullish order block here, we traded down into that. So at 3 a.m. as well, this would have been a beautiful entry. Go long, stop loss below here, and then where do you want to let off your stops? Probably above these relative equal highs, which I'm expecting price to draw up to. So we might find that we just keep rallying, and that's completely fine. And we need to allow for that. Yesterday really showed me and showed us that price, like I really wanted to see price go one way before going the other. That's just me using my ICT understanding, in that price should drop one way before it trades another. Just like we're seeing here, price drop this way before it trades higher. So we're allowing for that, which is why I want to bring our attention to this daily inversion fair value gap, because it's so significant. So if we go on the daily and we drag this through, you see how price volume is respecting it. So it should act bullishly. So if we find ourselves tapping into it, it should continue to act like a trampoline for price to help send it higher, basically. So let's go to the 15 minutes, see what we can find. Not really much, but you can see here there's some price action. This is what we call a consolidation. So I'm happy for price to tap down into that. I'll start coming into this range. Again, ideally after midnight, I'd like to think it can do that, just to give us that opportunity to set up, because it's time and then price. So we might find 3 a.m. gives us that setup, but we might find that we missed it during the Asia range. But there should still be a setup regardless. I'd like to think if this daily bullish order block, which is also where these relative equal highs are resting, but I'm going to use, I'm looking for these highs to get taken. I don't really want that. It's these highs which I'm looking at. If these daily highs are still intact and it's 3 a.m., I'll be looking for a setup to go long. So if these highs are intact and it gets to 3 a.m. London session and we're dropping, I'll be looking for longs. So long as we're respecting bullish PD arrays, in that we're not taking out this consolidation, respecting this daily inversion fair value gap, and dollars also doing what it should be doing. So yeah, that's how I'm looking at pound, and yeah, I'm just expecting price to keep rallying. I'm happy to, these relative equal highs seem like an obvious target, and then we have these highs up here as well. But again, there's only so much movement that we can see on a Monday and a Tuesday, especially on non-farm payroll week, and we have high impact news all week long. So. And also, one thing to think about, GBP's Bank of England interest rate decision is on Wednesday. So, they're going to be setting the market up. Remember, they're engineering liquidity. They're engineering liquidity now for it to be later taken as we run into that Wednesday. So tomorrow will probably be a lot more manipulative. And then Wednesday we'll see the big movement, and it'll keep running into the Friday, I reckon. But we'll talk more on this tomorrow. Let's go and finish up on Euro USD. I've been chatting for a while now, and you can see price completely gone crazy. Again, these long wicks do the damage, guys. Volume is what you want to look at. Wicks do the damage, and you can see that right here. Absolutely crazy. Same thing though. Nothing's changed. And look, who's it taking out? What has this wick just done? Anyone that's long, so any big money, any big firms, any big hedge funds that have gone long, like, oh, Euro's about to go higher, they've been absolutely wrecked, right? Because their stops will be below here, their stops will be below here, their stops will be below here, and spread would have caught. If this didn't catch you, spread would have caught you. And it happened fast. So they're preventing anyone from going long and scaring people into it. And now they're seeing price drop like this. Everyone's going to keep thinking, it's going to keep dropping and whatnot. So it's all manipulation. There's only and this is, everything I'm saying here is like based off the way ICT is showing it. But nonetheless, you can see, look at these relative equal lows. Price came, grabbed, and look at their expansion. So now we're doing the same thing. We're looking, okay, where can we look for potential setups and where are we trading to? Well, now I'm looking for these highs to get traded up towards, ideally here, excuse me, here and here. And then I do like the look of this bullish order block. Now, if price, I doubt it'll drop all the way down into there, but if price use this, that's what we'd call a reclaim bullish order block. We could use that whole range, but I don't want to complicate us too much. But yeah, nonetheless, let's go to the 1 hour, take a closer look at what we can find. And voila, we have a beautiful bullish order block here. Let's get that marked out. And if we're bullish, it should be what? Respected. So we're going to keep this drawn out. We're going to make this red. Let's draw out the entire range of the order block, because the 50% level is what we call mean threshold, and that's the very lowest we expect price to trade if we're to remain bullish. So let's get that mean threshold marked out. And here's the thing about these mean thresholds, right? It doesn't need to trade to it, okay? Ideally, it doesn't trade to it. Ideally, it only trades to the open of it, of the order block. If it trades to the 50% level, it shows price is weaker. The less of the order block price manages to trade into. So if it trades to the 25% level, beautiful. I'm happy with that. We're likely going to see a lot of expansion. If it gets all the way down to here, I'm a bit like, it's fine, but ideally not. If it only gets to here, beautiful, and it'll ping, and you'll see it. You'll see it in the response and the behavior, and you can study that yourself. But my point is, again, if we're going to have an up close day, we want to see some kind of drop in price for them to accumulate, or give us a chance to accumulate if they want to give us a chance. Remember, they don't have to do it. There's a fair value gap here, so that would be an ideal ICT setup. And yeah, it's just a matter of waiting. I'm probably I reckon 3 a.m. is going to give us a nice setup tomorrow. I am thinking London session's the one. Do join the Discord if you're not in it already. This is the last look. This is the last up close candle. That you want to know why I'm marking this out? Last up close candle before this drastic movement, before we expand higher. What about this candle? It's inside of it, so it doesn't really matter. And this isn't the one I'm looking at. I'm looking at the significant swings here. So I'm looking at this one. And then you can also see it's within the fair value gap. And you can see there's a gap just there as well. So I'm looking for price to drop ideally below these lows and give us a setup. So I'll be paying close attention to this around 3 a.m. And then again, I told you our targets are these highs and then these highs. But what happens if we keep dropping and price gets below this 50% level? I'll simply just won't trade. I'll stay out of it, because I don't want to. As soon as price starts going against anything I've said, I'm just not involved. I'll just wait, because it's not doing what I want it to. I don't try and fight it. So if price starts dropping and it doesn't respect this and it keeps dropping and dropping, I'm not gonna. I don't like going long from 50% levels of order blocks. So it's not strong enough for me. 25%. If I start seeing a reversal form, then it's the right time of day. I'm like, okay, this is a nice setup. But when it gets here, I'm like, nah, it's not. Even if it does, I'm just like, nah, it's not good enough for me. I have standards, guys. You have to have standards. A bit like with women. As much as pretty as they can be, you have to have standards. Respectfully, and to all the girls out there, it's a bit like with men. You need your standards. So anyway, thank you so much for watching, guys. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, and join the Discord as well. I'm active in there. Peace. All the links are in the description, by the way.